is a political fight brewing for the Fed? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Harry Melandri, Senior Advisor at Arque Advisors. Hey, Harry. Lovely to have you back on.
It's great to see you again, Maggie.
So we've got the S&P and NASDAQ at new records after a monthly jobs report that showed labor market growth, but maybe not too much growth, that kind of right in the middle, at least on the headline. But I don't even know if that's what's fueling stocks. I mean, they just seem like they're on this relentless march higher. How are you feeling about the markets right now?
It's hard for me to be particularly passionate either way. I've got some positions they're working. They've been working so well that I've just not focused on other projects I've been doing, and I've been too busy kind of ka-chinging. Um,
That's never
I
a bad
think,
thing.
yeah, well, exactly. It's hard to complain. But I think a lot of it is just people are below their bogey. And they're trying to get to allocations which are going to be less embarrassing to talk about with their institutional investor clients. So some part of it's that. I think a load of people are carrying a lot of cash. I know I am, right? And if you're not comfortable carrying so much cash and you're underperforming by that degree, you're going to try and bump it up. So at the margin, there's a little bit more to go into year end, and that's not so surprising. It's one of those seasonal effects you get this time of year.
Yeah,
Um,
I think I was Warren Paz was on with me. He called it chase dynamics, and I like that. I mean, I think that kind
right.
of sums up what it feels like. So that aside, though, we did get that labor market report, usually a pretty big indicator. How are you feeling about the economy? So the market's on its own flows are driving the market higher. What's happening with the underlying economy?
I see so much evidence of they call it a K economy, don't they?
Hmm.
A letter K economy, where if you got enough stocks, you don't even have to work for a living. You're doing fine, and if you don't, it's a little bit tough if you don't have skills to sell. And you see signs of that. I mean, one of the things I wanted to talk to you about, and maybe we'll come to it later, was that shocking CEO assassination in Midtown.
Yeah.
And to my mind, I looked at that and I thought to myself, yeah, definitely one of the people on the downstroke of the K may
You
have
know
been
what, Harry?
involved.
Honestly, I had the same thought, or, maybe if it's not that, a sort of maybe a symptom of this broader just anger and frustration um, between the haves and have-nots, and the fact that some people are really struggling while other people are kind of living like Gatsby. I mean, it does feel like
Yeah.
this is coming to a head, and you hate to sort of talk about something so tragic, and there's a whole family, and you can't even think about the senselessness of it, but it does seem symptomatic of something. It worries me that that puts an awful lot of pressure on a Trump administration coming in where everyone thinks it's going to fix things. That's a really tall order. We're talking about some pretty serious economic problems when you have such a bifurcated economy.
So I can't be the only one who's been getting secondhand indications of what Scott Bassent thinks. I think what Scott Bassent, he's an eloquent guy.
Just in case anyone's been under a rock, the nomination for Treasury Secretary.
Exactly, which, by the way, seemed pretty hard fought, right? There were a lot of names coming up and the betting was swinging back and forth, so it wasn't so straightforward. But I was struck by two things, one of which was Bassent's view, which makes perfect sense given he's a long-standing hedge fund manager, was perfectly coherent. And we talk a lot about Trump being a populist, but if you look at the substance of Trump's policies, it's really about tactics more than a different approach. And I think, like, let me lead with the conclusion that we're coming to a point where the NAFTA consensus we went into after the Clinton years, or during the Clinton years, seems to have run its course. And instead we have what some people think is tactics on trade negotiations with China, but I think it's more than that. I think we're looking at a shift in industrial policy in the US, which is going to be used to shift who are winners, who are losers, and to address some strategic deficits, problems that the United States is facing. So, and I think that's bipartisan. Brian Dees was the guy who kind of was introduced by Sullivan as the architect of this industrial policy. that policy was to ship kind of onshore strategic technologies into the US. Well, one of the side effects of that is you'd expect to see more jobs, you'd expect to see higher wages, and you'd probably expect to see inflation. And we were chatting about this by email beforehand, and you said, "What do you mean elasticity of supply with respect to this?" And what I mean is, like, the theory would say, when you put tariffs on, you're going to see some degree of import substitution, and you're going to see some degree of just higher prices, depending on how quickly your supply side can respond. Well, my gut is that the supply side in the US can't respond that quickly because it's really quite hard to do it. If you were somebody like Warren Mosler, his gut would be that we can replace the entire capital base in, I don't know, 10 years or so. We just rotate these things. It will, like triggers broom, we'd say in the UK. You need a new broom, you switch out the handle, you need a new head, you switch out the head, and do you have a new broom? And so I think this issue, it's going to happen, and it's bipartisan. The only argument was always about tactics. And if it's correct, we're going to see quite profound changes and quite profound market moves.
So there's a lot to unpack there, and I do want to break it down a little bit. Harry and I were emailing because Harry's launching a new Substack on Monday. Is that right?
Yes. Yeah. Well, it's a question, essay crises. You know how they are. So yeah, I thought I'd call it. So I'm working with Arque Advisors, which is an IRA that advises institutional and high net worth individuals. And I wanted to publish my own ideas as well on a Substack, because I wanted to get them out to as wide an audience as possible. And the name I picked, because I'm deeply pretentious, was Respice Finem, which means consider the end in Latin. So I picked it partly because it's the motto of Homerton College, Cambridge, and I have what I hope will become a typically funny, if a little risque, story about why I settled on that name. We don't have to go into that. I hope to publish it on Monday with the Substack.
All right. Well, we're going to tune in. I'm super excited to find out about that. Of course, we're talking about the end. It seems appropriate. But we're on Substack too. So we look forward to sharing and
Right.
participating and getting a little levity from you, Harry.
Yeah,
But
exactly.
But in that, when you gave me an idea, some of the things you're going to be writing about, you did touch on this. And first of all, hi to everybody in the chat. Great to see you all. Some people had a little trouble with the feed. If you did, just refresh. That seems to be working. And as many of you know, I wasn't here live Wednesday because my son was in a state championship game. Very big deal. He won.
Ooh.
Paul, I am not hosting a party for them. They're taking care of that. So happy hour is happening here. And some people have their drinks, gin and tonic for one, whiskey for another. Enjoy, everyone. We made it to the weekend. Yeah, this is a great crew. But on to the serious stuff, and I want to emphasize this. You're the third person this week that's talked to me about this. It's just, but it is not in the mainstream right now. I think it's, sort of serious money just starting to think about this because the implications are so big. This idea that has generally been accepted that Trump is a sort of tough negotiator, right? And this is going to be these tariffs are going to kind of rein in and rebalance a little bit, maybe some of these unfair trade deals, and we're just going to kind of reset. And I talked to Juliette DeClercq about this. We're going to release this on Sunday. And you now have just said the same thing. Peter Bookvar mentioned it. This may not be that. This may not be the deal maker, Trump, just getting a better deal, talking tough to get what he wants. This may actually be much more substantive. So when you're talking about industrial policy, just explain what you mean by that. Are we talking about reshoring? Are we talking about not a temporary, sort of punishment, slap on the wrist, better deal? What do you mean by
we are talking about reshoring? Exactly that. So we had this, like the NAFTA deal we struck turned out in retrospect to be a disaster for industrial America, for middle America and the Midwest, and a wonderful thing for the coasts. If you were a real estate owner in New York, LA, San Francisco, you absolutely made out. And that's because we allowed wages in those sectors to decline, and we concentrated economic activities on those coasts. We took allocative industries advertising, global franchises like Google search engine, data management, and we left China and other countries to do our dirty work for us. And this resulted in a global labor arbitrage. And you could argue we didn't really have a choice, because you can either you do low productivity businesses or you do future high productivity businesses. You could argue that was inevitably a good thing, but there are always winners and losers. All policy is winners and losers.
Right. You could talk about it as the shift from industrial to technology as well.
Exactly that. So, and the problem is you leave people behind. So if you look at real estate in Cleveland, it did not do as well as real estate in New York. Well, that process may have run its natural course, and we no longer can form a political consensus without recognizing those people who are dispossessed. And that, you could argue, that's kind of what Trump's election in some sense symbolizes. Now, I'm talking about politics, and then we can shift it into geopolitics, but really let's just focus on the economics, because once you accept this notion that the members of Trump's administration and Trump's administration are actually not looking to tariffs as tactics, a tactical ploy, but they're looking to use it as part of a shift in industrial policy to onshore key strategic industries in the US, you get to a very different place quite quickly.
So, and on the surface, there are a lot of people, including people on the coasts, by the way, who are tired of buying cheap, crappy stuff, who might say, "Oh, you know what? I support this. I want to see this kind of rebalance. It's needed. It went too far. The pendulum swung too far. Too many people were left out. We need to reestablish manufacturing." When you're saying the supply elasticity, so what's the rub there? When you're saying supply can't keep up, what will happen as a result, or what is the prospect as a result of adopting this new industrial policy?
How quick and painless an onshoring process can be. So it took China 40 years and a hell of a lot of central direction and of investment to get dominant positions in the 500 or so industries it's dominant in. How long will it take us to reacquire those industries, or sufficient dominance to compete effectively? And you don't have to even compete fully, right? You can block them out, have the tariffs in place, and just accept that that's going to cause rises in prices because we are not the most efficient producer. Well, that means you get a process of deflation in China because it doesn't have a market to sell this stuff into, and a process of inflation here to some degree. And so the question is the mix between a supply response and a price response. And you talk to people in the transition team, and they talk about offsets. They talk about the fiscal impact of tariffs and how that will offset the deficit trends in the US. I think these are, I look at pay-fors and I giggle a bit, because pay-fors are a congressional mechanism. You pretend that you do a dynamic scoring and there'll be revenue in the future. Whether there is or isn't doesn't matter. It's about putting a policy through now, and the fact that it has to supposedly be paid for by an independent CBO. Well, independent. You really think the CBO is independent? It's a question of who appoints the CBO. So ultimately, I don't think the pay-fors matter very much, but you get to a place where Trump will justify this. Or the administration will justify these things, and we may or may not get a bigger deficit than we anticipate. But I think what the market seems to be discounting right now involves very big deficits. And it's not my impression that Congress is there to approve those very big deficits. And the tariff money may or may not be realized. I doubt it will be realized. I doubt it will come through. If it is realized, it just means we got it in as inflation.
Right. So is the market, when you say the market's pricing this in, if we have higher inflation, should we be looking at stock markets at these levels and the 10-year yield at this level?
So stocks do seem to be pricing something weird happening, because the implied earnings growth in 2025 seems to be about 13%. So where do you get that from? Is it productivity growth? Seems unlikely, right? Is it inflation, nominal earnings growth? Well, what do you think inflation? I thought core inflation was about 3.5 or change. So it better not be inflation. And so that leaves you with like a massive increase in nominal GDP. And of course, nominal GDP looks like it could be estimated to be something like 8%, right? If you look at past metrics. So taking all that into account, then the market is obviously, it seems to be assuming some expansion of fiscal policy. And certainly Trump was really friendly towards that last time around, right? He's not a pro-recession guy.
Well, what elected president is, by
Yeah,
the way, and
right.
when have we had an elected official that didn't like to spend money in a long time?
Exactly. But the story, what I'm hearing from my political contacts, and I'm not the only person who talks to people in Congress and people who are, connected, who are political consultants. What we hear is actually there's a certain measure of disgust with the scale of the deficit. So then you have to push that through a Congress. Now, nobody wants their particular piece of pork to get cut. Everybody else's pork should get cut, not theirs. But
which is why we're in the situation we're in.
Right. But there's no real appetite for a massive wholesale expansion of the deficit again. And you can scribble it down on a piece of paper saying tariffs will pay for it. The odds of tariffs, if tariffs pay for it, it's because the supply response wasn't that big.
So does the bond market sniff that out? I mean, presumably then yields should be higher.
Yields are higher, but the bit of yields which is higher are real yields. Break-evens have hardly budged. So while we have stocks pricing in some significant uplift in nominal GDP, bonds are not pricing in any significant uplift in inflation. Why? And if I were going to explain that, some part of it is it's getting harder and harder to sell US treasuries to international investors, partly because they don't look great, and also partly because there's more and more competition for scarce resources globally. There's I wrote a lot about this with Julian, on the subject of global shortages of savings. We did work with a guy called Rob Duggar, who used to be the kind of chief political analyst and a partner at Tudor, on this question of, do we have sufficient global savings? And, there are really good, incidentally, Bernanke talked about this in 2005. And when Bernanke talked about it, he referred to it as a savings glut, because back then there was plenty of savings. He had a whole bunch of Asian countries that didn't want to consume all of their production. So they were parking it in US treasuries. It doesn't look like that's the situation we're in today.
So are you expecting much higher yields on treasuries to try to attract buyers, or as a result of the fact that they're just not buyers out there?
You may well need to have higher yields to attract international buyers. And I think there's a pressure point there. I don't think those higher yields are consistent with all the leverage balance sheets we have in the financial sector. So what happens then? As yields creep higher, a whole bunch of real estate related bonds kind of default, and we're looking at recovery values which are at 15, 30 cents in some cases. And then institutions that relied on those bonds have trouble. So you get into a bigger problem at that point. And I would have thought, and this is where we get into this question of Fed independence, like this whole agenda, if we run it this way, where we have slightly bigger deficits, but too big for the international appetite for US paper, you can fiddle it, right? You can adjust the quarterly refundings to have less duration issued to the market. That just pushes the problem into the future. You can use a central bank to do it. That just gives you more inflation. You just expand central bank balance sheets. So ultimately, what I would normally suggest is, once you've done with sucking in international capital, you let the dollar go, and you let you ask the central bank nicely to drop the front end of the curve to give you enough carry to hold that, to make it worthwhile holding that paper. And it seems to me like when I see this discussion on Fed independence, it's like this was completely anticipated. Everybody knew. Like I saw a Timmeros article in the Wall Street Journal in I think in April on this question of Fed independence, and they hung it on the idea that certain unnamed Trump officials people connected to Trump were making proposals about Fed independence. Well, what exactly is Fed independence, right? When can a central bank decide to tell a politically elected leader, whether you agree with that politically elected leader or not, what economic policy should be? So what are the limits here? We've never really explored this question of what exactly we mean by Fed independence.
Mm.
And to my mind, if you have the central bank and the White House at war with each other, with one guy saying, maybe the dollar should be a bit lower. Well, you're going to have international investors, like those gifs on Twitter where guys lean back in their chair and start popping popcorn. They're not buying bonds. They're popping popcorn, watching this and thinking to themselves, where is this going to go? So I think Trump can apply enough. The legal situation is that the Fed is independent. In practice, if you start sniping at them and start appointing hostile Fed governors to carry water for you in those committee meetings, it won't take very long before you have to negotiate some kind of integrated policy. So fiscal policy has to be integrated with monetary policy, or a lot of people are going to look at dollar bonds and the dollar and the Treasury market and go, can I have some more risk premium, please?
Yeah, you have a sovereign bond crisis. I mean, in some way, even though they may think they're fighting each other, they're both subservient to the enormous deficit, right? I mean, that's going to dictate. They have to roll over all the interest. It doesn't matter what either of them think. They're going to be, at the end of the day, forced to do that.
It would really help if, for example, the interest rate itself dropped to make the interest burden in the deficit a little smaller. That's $1 trillion there, right? So obviously you're not going to get it to zero, but at least I hope you're not.
Is that what the stock market's pricing in too? The fact that one way or the other, these rates are coming down.
I don't think so, because you'd see it in SOFR, right?
Yeah.
So SOFR would flash it up first before the stock market flashed
The
it
overnight bank lending rate.
Exactly. But these things are not consistent, and something's got to give, and you have to decide what.
I want to ask you, we just talked about this, but I want to make sure that we answered Melson's question about the balance sheet. Maggie, could you please ask Harry about his views on how the political dynamics at the Fed will be might affect its balance sheet policies, given that bank reserves are nearing Waller's prescribed 10% of US GDP, on RRP is almost completely drained, and the TGA, Treasury General Account, is around $800 billion. I don't know if inherent in there, Melson, you're asking, could they do yield curve control or something else? Like, is this all coming?
They don't need to do that here and now, right? We don't have that kind of sovereign bond crisis. But the reason you get QE is because you don't have enough buyers for bonds at yields you want to sell them at, right? That yield. And so that's why central banks anywhere in the world step in and go, you know what? We're going to set the price of these bonds. Now, are we there now? No, we're not. But it depends on where fiscal policy is going. To some degree, I would argue fiscal policy is going to be integrated with industrial policy. The idea is to rebuild American industrial capabilities so that we can have a military which isn't reliant on the Chinese for certain components. It's absurd. We got to a position where the Pentagon has identified a certain number of components that have to come from China. That can't be the case when you're identifying China as a potential adversary. So we need to onshore those components. And that's what Brian Dees was writing about and outlining. That's what Jake Sullivan introduced. This is you don't really have a military if your military is waiting for Amazon to deliver parts from Shanghai.
Which, by the way, can have kill switches in them that disable them at any time,
right?
as we already know exist in routers. Go watch my interview with Alex from Security Scorecard IQ to find out hear about that. So, Harry, what does this mean for investments? I mean, what are you doing given this outlook? How are you feeling about stocks and bonds?
So I've been lucky or good, or I don't know, some random combination of those, in that I've had a lot of emerging market fixed income. And I had that because I'm so old. I've seen multiple defaults, and I kind of know the script on defaults. So I picked up as much defaulting paper as I could, because 2000 over forgives a lot of sins. Um, I say that, and I know there are guys who are invested in this space who will say, yeah, but it's a longer story than that. And they're absolutely right. It is a longer story than that. But once again, 2000 over can forgive a lot of sins. And I have a little bit of stock. My stock position has not changed for ages. I was overly conservative, and the thing has rallied so damn much that now I don't have a conservative stock position anymore.
That's how much it's rallied.
That's how much it's rallied. And I have no particular desire to change it here and now. I own a certain amount of bonds. I kind of regret every damn bond I've got.
Really?
At some point, the Treasury bond, the situation is probably going to get worse before it gets better. People are factoring in some kind of slower economy. Well, it's not there yet, right? Why isn't it there yet? And then we're also now factoring in some sort of retrenchment of US fiscal policy on top of that industrial policy. Well, how, right? We're meant to have a developer investment in green tech, in the military stuff, in semiconductors, which got US abandoned as a business. And those will require enormous investments. So then we have the question is, can you cut other parts of the budget? And also, will Trump give tax cuts? Well, you know what? He ain't going to sunset the ones he put in place. So altogether, I think there's no consensus to have broader fiscal support, but it's not gonna exactly collapse, is it? And then you have the tariffs on top. I just think the whole thing is a consistent whole. It does make sense, but it probably won't work quick enough to bail you out from excess inflation. And then you're going to have this fight. So you're going to have a Fed that's going to prioritize inflation. May not be the right term, because it doesn't really look like they've been prioritizing inflation, but they're now at a point where they can't really give much more ground. They think neutral rates are lower. How much lower? Well, maybe not that far from here, given the Bayesian conditional of what we're actually seeing in the economy. When does it slow down? Not necessarily this month, not necessarily next month. Yeah, things are terrible if things are going badly. They're not terrible if they're not, right?
Yeah.
So I don't think this is a situation where I want to own bonds. I don't see any situation where I want to sell the equities I've got. This, actually, I almost forgot to make this point. One thing I never see people talking about with tariffs. So tariffs, you think of this as blocking exports, but implicitly, you've got a lot of Europe, which is now a competitive disadvantage on energy, and they have to decide whether they're going to abandon the US market. They're not going to abandon the US market. So what you're going to see is increasing investment from German companies or French companies that want to do business in the US but don't want to be disadvantaged with tariffs, and they're going to move productive capacity into the US. The same's true for Japan or China. And in fact, you see it all around. You saw the attempt to buy US steel by a Japanese company. I don't know if that attempt's going to go through. I haven't been following it. But that was about rules of origin on industrial production. If you buy steel and you produce it in the US, you can avoid the tariffs. You're part of the US productive process. So, and if you talk to industrial real estate brokers, they will tell you that you're seeing foreigners shopping for space.
Wow.
So why would you assume this whole thing tips over when you want it to? I think if there's pressure on it, the pressure comes from the leveraged balance sheets that are owning real estate assets, and we have relatively high rates. And that's why we're going to see a fight between the White House and the Fed somewhere down the line, because those groups will be distressed.
So bonds, difficult outlook for bonds, stocks at these levels. It's I think Michael Howell used the term "party by the door." stay close to the exit. That's what everybody's saying. Like nobody wants to get out of the trade because it still feels like these flows are going to push it higher into year end, but be cautious. But you're sitting on emerging market bonds. So are you staying there? Is that still where you're looking? I think Ralph said, what are you interested in Latin America? Does that still seem like the trade that you like? And do you really have to watch the dollar in that case?
Yeah, but my guess is that the next move in the dollar is down. The next big move in the dollar is a softer dollar, not a stronger dollar.
Is the Trump administration going to intervene to make that happen, or does it happen naturally?
I think they're going to jawbone it to some degree. They're going to muscle the Fed. They're going to argue at the margin for the Fed to be easier on policy. And here's the thing: like I'm so old. I remember when, say, a Bank of England governor, if he considered himself persona non grata by central government, would simply step down. So this whole notion of independence in central banks, how does it tally with the idea of democratic oversight of the economy, where it doesn't, right? It's not consistent.
Well, I think that in my mind, the idea of it was instituted long before these gigantic deficits, when there was a risk that there would be foolish spending just in order to win votes when that mattered. But clearly we've moved so far away from that you're right. Like the question of what it's really about now, I think is very different than maybe the intention of it in the beginning.
Yeah, I think to some degree the idea always was to take the economy out of the hands of voters. But if we have a democracy,
politicians, not voters.
Right. Well, politicians,
voters who may not, politicians who knew what they were doing, and voters who may just be falling for the campaign promises without
exactly. But think of me as sitting there popping popcorn, leaning back in my chair and watching this and expecting fireworks to fly. So this is going to be.
Jay Powell makes do you think he goes, or because he's like he can't be fired, and he sounded like he was in for the fight? But do you think that is the case?
I think it's an unseemly situation. It doesn't make any sense to me to have a central banker who's leaning on the fact that that the Fed is an independent institution, while government policy becomes internally inconsistent. So it's almost as if the Trump administration is going to want to be in a place where you have fiscal determinism, while the central bank is going to say, no, monetary policy is dominant, not fiscal policy. And that battle seems to me to be a good reason to think risk premia should rise. But I say that at the same time, it's not like you will need Trump to fight the Fed to get that weaker dollar. Right. And when that battle opens up, like the thing that fascinated me most of all is the Fed looked like it preempted this to me. The Fed could see this coming a long way off. And that's why, because Nick Timiraos doesn't write articles based on his gut feel. Right. He goes in, he has a chat. Somebody briefed him. So this has been something they've been worried about for a while. And to be fair, the way that White Houses have previously exercised influence over Fed policy is to appoint governors, and those governors argue vociferously behind the scenes about what the Fed should do. I would argue that if you look at Lael Brainard's public utterances, they were always perfectly consistent with the objectives of the Biden administration.
Right, playing in the public court of public opinion. Scott Bassent is interesting here, though, isn't he? Because he's a behind-the-scenes operator. He understands sort of deeply how financial markets work.
Yeah.
So that's kind of an unknown for me. If it was just Trump and Jay Powell, you could see like ding, 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 the boxing ring, and just fighting it out in public. But Scott Bassent throws an interesting wrench in it for me, because I'm not sure. Maybe he wants a foil or
I don't think it throws a wrench. For me, I took the comments that Scott Bassent is reported to have made by friends of mine, right? And he's a hedge fund manager. What's the phrase? 2 Kevin Bacon points away from each other. Like So by the way, if you didn't know better, Scott Bassent could easily be a woke appointment from a Democrat government. It doesn't a Democrat administration. And the things I've heard were consistent with the idea that it's time for the US to address the situation of those people who had been left behind. That you will have a policy which is inherently inflationary for those wages, for your electricians, your tradesmen, for your, like, if you limit immigration, the implication of that for, say, the construction industry is that it will raise wages in the construction industry. And when people made that point to Scott, he said, and why is that bad?
Mm.
Right. So, and then you ask yourself, okay, so what is the priority? Is it getting inflation down, or is it addressing some of these problems of, and can you solve the US's problem by restricting immigration? No, that won't solve the problem. If anything, it will create other problems, but you will shift who the winners and the losers are at the margin.
Mm. Such great stuff, Harry. Someone said Harry has friends in high places.
I've got more friends in low places, to be fair, Maggie. So.
Well, we like that too. Harry, so great to end the week with you. This is a really important conversation to have, and these issues are going to be really front and center. And so really appreciate digging in with them. And as I mentioned, you all should watch the conversation I had with Juliet. I'm going to share it with Harry as well, because she really is also thinking along these lines and has some really, really interesting things to say about these. She calls it a macro revolution, and I think she's not far off on that. But her take is interesting, especially her views on Elon Musk are very, very interesting.
I never thought I would live to see a totally new type of government. Like, in the past, I've heard of oligopoly, I've heard of democracy. This is PayPalocracy. Like, either whichever candidate won the election, people who made a lot of money, original shareholders in PayPal, are going to be involved in the process of government.
Right? Cryptos are. I mean, yeah, it used to be Goldman. Now it's coming from there.
Now it's PayPal. Yeah.
In Silicon Valley, we trust. Again, something I talked about with Juliet, but it's really fun. And the thing that everyone seems to agree on. By the way, D. Smith, this is Mike Green. We've been having this conversation. This is really, really important, and it could be a really volatile time. And it's not one without pain. I think it's fair to say, and opportunity. So
that's right.
Really, really important to focus on. Harry, we look forward to the Substack. We'll see you around the stack.
I hope it's that the idea is that geopolitics and finance can be fun.
I
may
like
not be true.
Harry sort of untethered. Harry, right? Harry unchained.
That's right. I don't have to edit to make sure it's in line with a committee.
Harry let loose. I'm looking forward to it. Seriously, Harry, always great. Always great to catch up with you. Thanks so much. Thanks to everybody in the chat. Love it. Didn't get to all the questions, but you're right. Harry is the GOAT. But we look forward to seeing you back here on Monday. We're going to stay on some of these global themes. In the meantime, everybody have a fantastic weekend. Take care and good luck.